Good morning, good afternoon, good evening, wherever you are. Thank you for joining us for today's public webinar. It's been a little bit since we had one. So this is with regards to navigating the employment report we had earlier this morning. For those of you that are new and joining us, I just wanted to point out on our website where to find some things. Jim's going to be talking about the last YouTube video that was released. We release a YouTube video every weekend called The Week Ahead, and you can find our official YouTube channel here so that you can go and maybe subscribe to that so you don't miss any video updates there. Good morning, Jim.
Good morning. Okay, and I want to start off talking about what the YouTube channel said last weekend. There was this discussion. Everybody was, talking. Is there not a correction underway, etc. And on the video, I was trying to lay out a perspective of what do you look like, what do you look at, and how do you keep a perspective. And I talked about, and I don't remember how many years ago it was now, 3 or 4 years ago, but the daily bar had turned down, the weekly bar had turned down, and the monthly bar came within a few ticks of turning down. In other words, the daily bar had ceased one time framing higher, the same on the weekly, but the monthly had not. And the market then went on to make 22 new highs. We are in a very similar situation right now. And again, it's with all of the craziness going on. So that was what the YouTube video said last weekend. Now, what I'd like to do is I'd like to show the slides. And when I look at the market for perspective every day, I always start with the monthly bar. So when I look at the monthly bar, it has been one time framing higher for several months. And you can see now it's about halfway down, but it's not, it hasn't ceased one time framing. So then I go to the weekly bar. And if we can put up the weekly bar, and you see that the weekly bar, and some people may challenge how I draw trend lines. I'm not an official trend line person, but you can see we had an inside week, and then the outside week has broken to the downside. And of course, it's right on the trend line. So we have turned down a little bit. We had been on one time framing higher, 1, 2, 3, inside bar, turned to the downside. Now we go to the daily bar. Can we have this? Oh, there we go. And you'll see the daily bar. This was really what I call just a hodgepodge up here. Tremendous amount of lack of insecurity from anybody's belief. It's up, it's down, it's up, it's down, very narrow ranges. And of course, then yesterday, you broke down below the trend line yesterday. So when I'm looking at this, taking very short term, the trend line would be right up around the 2250 level. So when I'm looking here, the two short-term references I'm using today are, the 5250 and the 5200 level. That's kind of my short-term gains. But what is important to me right here is the daily has turned down, the weekly has turned down, but the monthly has not. Jen, let's go back to the monthly one time, please. So this is, you would need to cease one time framing on the monthly in order to complete a sign of a correction being underway. And that's, it's really hard to keep in perspective because the market has been so crazy in here. But I wanted to give you that perspective. Okay, so now let's go back and let's take a look at the today's profiles. So you see the March low. So the market would have to take out the March low at the 51.24 level in order to, complete what is going on the monthly chart. So that would be my absolute downside reference. And as I say, then the trend line would be about the 52.50 level on the upside. So that's just to give some perspective of what's going on in this market right now. Now, I'm going to stop, and Jen, let's go to my screen.
Okay, let me give you the screen. There you go.
Okay. So where we are, the jobs number has come out this morning. We are near the lower end of yesterday's range, so we're showing some acceptance in there. And of course, right now, they're looking at the 5,200 level. And you can see, this is very stretched out on the downside. Now, they attribute it to statements by Fed officials. They attribute it to oil. And, maybe there were some people that had an inkling of what the jobs report would be today. Who knows what it is? But it's been one of the most difficult markets that I have been involved in some period of time. The Thursday market, which I'm going to spread this out, was, the market broke, rallied, broke, rallied, broke, and rallied again. There's just this craziness going on among short-term traders in there, and it's, Jen, go back and let me read the final slide before we do a commercial and ask some questions.
Okay, 1 second. I will go back to slides. Okay.
I think this is one of the best slides I've ever seen, or one of the best things. This is Shane Perry, the author of Clear Thinking. A difficult challenge for short-term traders is that when you become part of a group, there is a tendency to become like them. Remember, all the anecdotal evidence suggests that less than 5% of the group is profitable. Our surroundings influence us. We unconsciously become what we are near. As you adopt the behavior of those around you, the changes are often too subtle to notice until it's too late. And I suspect that this is happening to so many of you out there as traders. You get caught up in the craziness of the very short-term traders in the market. I have spent more days totally out of the market in the last few sessions than I think I ever have period of time, and it's hard. You sit here and you want to trade. It gets in our blood. But I did enter on Thursday, and I got whipsawed on Thursday. It was a very disappointing day. And then I turned around yesterday and had my best day of the year. Now, the secret to having my best day of the year is I had some puts left over from Wednesday. And when the market broke yesterday, I was locked in a MRI tube for over an hour. So as the market broke, I couldn't mess it up, which I'm sure, as I told Jen, talk about, dumb luck. I would have messed it up, because as soon as it got to be up, probably about $2,000 or so, I'd have been excited and gotten out. As it turned out, it was many times that. but it was just pure luck. And that's what it's been exceptionally difficult to trade this particular market. Where we are right now, and we can go back to my screen, please.
I'll give you the screen back. And
Please.
that was it's always refreshing to hear you admit when you say, I would have messed that up. There was some luck involved.
Oh, I mean, there's absolutely no question about it because what the market's been so crazy. I know I'd have gotten overly excited and, I'd have been up a little bit and I thought, oh boy, this is pretty good. And it kind of makes up for, for Wednesday. Anyhow, the this has been an extremely difficult market. For those that are interested in what we do and how we look at markets, we have a primer starting on Wednesday. The primer is our low end course. It covers 8 days. First 4 days are linear teaching to introduce you to the concepts. The last 4 days we get involved with live markets and we do, reports. But it's really the purpose of the primer is to orient you towards what we do, how we look at the markets, and gives you some idea of how we combine momentum. As we say, momentum trading is clearly the number one method of trading. And the reason for that is it's the easiest. It's just simply price based. What we do is we put market generated information around momentum. So we say that momentum trading is the lead indicator and market generated information, or what we do, is the secondary indicator. But what it does, it gives context to momentum. Too many traders out there are constantly whipped around because they're only looking at price, or they've got some magical indicators, or references they're looking at, and you have to understand the market in a much deeper fashion, I think, in order to be able to be successful as a trader. The first thing, it is highly unlikely that you will have a chance to be a successful trader unless you start with knowing yourself first. And most people really don't even know how to address that issue. But a self-assessment, who you are, what you do, how you react to the markets, is probably the first thing you have to address. As we say, the market you trade is really yourself. So anyhow, Jen, just do a price breakdown about the primer, and then we'll go on and talk about
Sure.
the markets.
Sure. Well, the primer is $499. It's an inexpensive 8-day course. And I just want to mention, if you are familiar with our live market profile primer, we are not having one this summer. So you may want to jump on the opportunity to join us for this one, because we will not be having a summer live market profile because Jim will be traveling and and whatnot. So the first 4 days are linear education, and basically what we do is we take the linear teaching portions from our foundation and application of the market profile e-course and make this into the first 4 days where you are able to ask questions, and we go over the material thoroughly. And on the 4th day, we do go over the exercise of how to plot the profile manually. So you do not need to have market profile software. I know a lot of newer people may not have decided what platform they want yet. They're not ready to invest and subscribe to software yet. So you can do what Jim used to do before we had software, which is do it manually, or like I say, semi-manually using Excel. And you don't have to have the software and pay for that. And also, we just notice a lot that folks that know how to do it manually, understand the process, they have a deeper understanding and appreciation for the concept of value. So I think that's very helpful for folks. All of the webinars are recorded. You will have access to materials for 3 months after the course finishes so that you can review everything. And it's a great course for refresher for those of you that are familiar with Jim's work, or for those of you that are brand new, or those of you that have some knowledge and want to make sure you understand these very important concepts directly as Jim intended. Just also, here's our contact information. But I will go back to our website where I just wanted to point out again where you can find the course. So like I said, our YouTube is here, our X is here. You can subscribe to get our emails. We really don't spam. We only send out emails when we are announcing a new course, dates, or giving a free report or a live webinar. If you go to courses at the top navigation, you can find and see the primer is featured up at the top. Schedule is here so you can see the timings. And like I said, you do not have to have any software to join us for this course. There is no prerequisite requirement to join us for this course. And everything is recorded in case you're not able to attend live, and you'll have access to your materials for 3 months after it finishes so you can review. And I think that's about it. Do you have anything else to add to that, Jim? I would say for those of you who are not able to join us for the primer, and you want to do our foundation and application of the market profile e-course, that's an at your own pace e-course. It's over 11 hours in length, and this is also the prerequisite requirement in order to join us for a live intensive, if that's something that you've wanted to do. So if you want to join us for the intensive, you have to have this as a prerequisite requirement. The only exception to that is if you have done a full live intensive in the past that we can verify, and then you would be grandfathered in. Okay.
Thank you.
Anything else to add, Jim?
No, let's go back to the market.
Okay, I'll give you the screen. There you go.
Incidentally, we haven't officially announced it yet, but I think we're going to do an intensive in June. Just remember, the primer does not qualify you for the intensive. You need the foundational e-course in there. Okay, so now, if you came in late, just to review, the daily has turned down, the weekly has turned down, but the monthly has not turned down. As I said on the YouTube video last weekend, as I said earlier this morning, in order to have a real correction underway, you would need to get down, the monthly would have to get down to the, I think it's the 51.24 level in there, which to challenge the monthly low. Okay, let's open this up for some questions, please.
Okay, somebody's asking, Jim, does the high in the overnight session at 53.33.50, how does that look to you?
The thing that you have to be careful of is, yes, I say it is highly unlikely that the all-time high for any rally or the all-time low for any break is made in the over-the-counter market. I did not say impossible, I said unlikely. But too many times people get so focused on that, and it's only a single data point. If you think what happened, the employment report came out on Friday when the market was closed, and short-term traders are so accustomed to a rally following that that they took the market higher overnight on Sunday, and it was just knee-jerk reaction. The bigger money is unlikely to trade in that session, but by the time the market opened on Monday morning, the market was off. So it's a single data point. It is unlikely, but not impossible, that the high is made in the overnight market. But that doesn't mean it can't be. But it's only one data point. This has been a tremendously uncertain market. And I think if you look back, so many people are focused on, the Fed and what the Fed's going to do, and they get glued to that. A little bit of history shows that, the Fed has not been terribly reliable of being correct over the years. But we hang on there every word. What I've been doing in this market is, so many times people are trading the market trying to, what's the direction, up, down, etc. But I have been trading the market from a whole different perspective. I've been trading the market um, based on volatility in the market. In other words, not a directional bias. I've been trading based on a non-directional bias in the market, and that has set up some interesting opportunities because the market's, it's up, it's down, it's up, it's down. So I've been trading the volatility. Now it's a little harder to do because the volatility jumped yesterday. It's not tremendously high, but I think it got up in the 18% when it had been down, quite a bit lower. And it's made the options a lot more expensive. But what I've been doing somewhat is having some kind of strangle on, a separate higher call price, lower put price, and using that. That overall is generally a losing proposition. What I do in markets like this, in order to take some of that out, is if the markets make an initial move in one direction, I then sell premium against the side that's winning. You have to let it go, have a pretty good move, but that takes in some of the premium, so I'm not totally eaten alive by the premium. I would say it's been moderately successful. It hasn't set the world on fire, but it has given me a better opportunity to trade in this market that has no real clear direction to it. And I think that successful trading is a combination of creative problem solving. You have to look at the market, what's the market doing, and say, okay, is it going up? Trending up, that's one thing. Trending down, that's something else. Is it going nowhere? That's a different strategy. And I think you have to be creative in what you do and how you look at that market. Okay, now when we talk about the employment report, what we have found is that in the time following the report, between the hour prior to the market opening in the NYSE, if the market doesn't do any great move one way or the other, which this market hasn't. What was yesterday's settle, Jim? I should have it marked here. I don't have it.
Let me give you that number. It's 5197.25.
That was the settle yesterday?
Yes, 5197.25.
Okay. So the market has so the market is above the settle from yesterday. That normally, when the market doesn't sell off from that, that's normally a fairly positive sign. It doesn't have to be today. There's a lot going on, but it's normally a fairly positive sign that the market will at least do some form of balancing, and that would be consistent with what happened yesterday. Now the last time I looked, oil was still up near the highs. Gold had come off a bit, but the fixed income market. Let's take a look and see what's going on. And you can see that's the 30-year. It hasn't taken out the weekly low, so it's within. There's no change from what it was, earlier in the week. Okay, questions.
Okay, do you consider the all-time high made in the Globix that this is a sell-off, likely just a short-term pullback?
I don't know the answer to that question. And that's why I started off and I said, what do you do to keep perspective? And as I said, the daily has turned down, the weekly has turned down, the monthly has not. So I don't know the answer to that. I don't know the answer to that question. And that's why, I try and keep the perspective. It's consistent what I said on the YouTube last weekend. It's consistent what I said this morning. Um, and as I mentioned, 3, 4 years ago, whichever it was, everything turned down except the monthly. People got very bearish, and then the market went on to make 22 new highs. So again, this idea of looking for the magic answer is very difficult uh, in there. There's a lot of uncertainty in this market. I mean, you've got the strong job numbers this morning. I mean, so the economy still, it's churning out jobs. Um, the interest rates are putting some pressure on the market. But if you think about what's happened on the global basis and how negative the geopolitical can be, the market's actually holding up pretty well. So I think you have to, instead of getting locked into up, down, I think you have to keep an open mind that anything's possible in this market. There's a tremendous amount of uncertainty. And trying to lock in on a direction, I think can be pretty disastrous. Okay, what else?
Okay. Somebody mentioned I've been recording data since 2010, and an all-time high made in the overnight session has never held, meaning it's always revisited later.
Yeah, I think that's why I say the odds are high. But again, it's one thing to say it's never happened, but it's also important to say what happened in the meantime. In the meantime, while they've been revisited, in the meantime, there have been some pretty sharp breaks in the opposite direction. And if you get locked in on one piece of data, you will get a bias, and that bias can cause you to lose a lot of money. Um, the fact that it's never happened um, is one thing, but what was the time length between uh, when it happened and when it was finally revisited? That can be a very expensive uh, situation. Okay, so Jen, if it's okay, we'll stay here just a few minutes.
Yeah,
Um,
yep, not a problem. And
so,
we have a few other questions if you want to
okay,
take them.
go ahead. Well, so just very briefly. So what we've done, we've opened uh, overnight inventory is long. And of course, it was, inventory had to be very short yesterday. The majority of trading opportunities in a market such as we've been in for some period of time are inventory adjustments. Markets constantly get too long and too short. And it goes back to the initial um, slide I had showing what Sean Parrish talked about, when you become too close to the crowd, become part of the crowd. And the market's constantly gotten too long, too short. So I said on Wednesday, the market broke 3 times and they recovered every time. The short-term traders couldn't wait to buy it. And then they took it higher overnight and early yesterday morning. And they were just wrong. Um, and it's that herd instinct. Um, and so that's what I think I've seen going on here is constantly getting too long, too short, too long, too short in there. But the overall market's gone nowhere, and the trend still remains up. Okay, so we've opened. Um, the market could have traded lower based on the number and everything else this morning, but we're in the lower portion of yesterday's range. We're showing some acceptance of that, but right now. I have no idea. I have no bias of what this market can do. And I do caution that it was very thin going down. Very good odds that the inventory is very short once again. Okay, what else?
Okay, do you think that AI bots have affected the recent extreme market action?
I don't know, but that doesn't mean I'm right. Incidentally, we have a funny story on everybody gets so enamored with AI. Um,
Jeez.
somebody put in a question the other night. Um, who is who are
No,
Jen and
RJ decided to type into Chat GPT and say, who are Jen and RJ of Jim Dalton Trading?
can you read the answer that we got from artificial intelligence?
Yeah, let me find that here. Oh geez, I've just okay. Jen and RJ are two fictional characters created by Jim Dalton, a trader and author known for his work on market profile analysis and trading psychology. In his books and teachings, Dalton uses these characters to illustrate various concepts and trading scenarios within the context of market profile analysis. Jen represents a beginner or novice trader, while RJ typically symbolizes a more experienced or seasoned trader. Their interactions and experiences help readers understand the complexities of trading and how to navigate the markets effectively.
I point that out that, people get so enamored with AI can make mistakes. But I don't think that that's influenced this market. I mean, and who am I to say? And again, I'm more interested to watch market generated information, what's happening right in front of me. And a lot of times, like I say, you have to understand yourself first, but you also have to understand who your competition is. Um, and if you don't understand your competition, you get caught up with them, you won't appreciate the volatility. But so much of the trading in here has been short-term traders, and they all run and follow each other, and it can be very expensive. You can't fight them. If you get stubborn and fight it and don't recognize it, it's going to cost you money. Like I say, it cost me money on Wednesday because I didn't anticipate, you know, 3 recoveries on 3 breaks in the market. But you have to understand who you're competing against and how they're going to act if you're going to be a successful short-term trader. Okay, what else we got, Jen?
Okay, Jim, over the past week, would I be right in saying that there were several clear P liquidation days? Is this a sign that we're looking at laggards now in the market?
Not necessarily. You've had short covering and you've had long liquidation. You've had everything in the market uh, in here. You had uh, if you take a look, um, Wednesday you kept getting short covering on Wednesday, and then of course they took that to extremes, overnight. So you came in yesterday with very long overnight inventory, and we know there's a high correlation um, of counter auctions relative to overnight inventory. But a lot of times it takes some kind of catalyst in order to really change the market. And the catalyst yesterday, we're not sure. Was it oil? Was it statements by the Fed? Was it both? But come back to where we are. We are still in the multi-day trading range. Today's market could have been a lot more volatile with the number. Um, It's a very narrow range. We're being accepted within the lower part of yesterday's range. I don't see any direction here. I don't see any direction here at all in the morning. I have no bias one way or the other, and it's unlikely that I will trade today at all. Okay, final couple questions.
Yes. So is today the kind of day where the overnight inventory is long? You might have your mind more on the fact that overall inventories might be too short after yesterday's liquidation?
Oh, I think there's a strong possibility that I think inventory got ridiculously long yesterday, uh, following the overnight and early yesterday, and I suspect it went to the other extreme um, yesterday. Um, Remember, there's still an awful lot of geopolitical events out there that can tilt this market one way or the other. But remember, as we leave, before I take the final question, there is absolutely no shame in sitting there saying this is a crazy market. I don't care to be involved. There's absolutely no shame in that whatsoever. Too many people, most people that lose money overtrade. They have trouble controlling their emotions. And remember what we said, it is highly unlikely that you're ever going to be a successful short-term trader unless you understand yourself first. And that starts with a very honest self-assessment of who you are and what you do. And those are things that we try and cover in the educational programs. Okay, final question.
Okay, and speaking of overtrading, we got this comment. I trade on evaluation prop accounts. I overtraded and failed many accounts. Can you please give your advice on how to stop overtrading?
Well, it starts with self-assessment, and there's no secret. I mean, I say, how do you stop smoking? How do you stop drinking? How do you stop overtrading? You have to really deeply understand the process and the problem. And we have a couple books that we recommend reading. One is Atomic Habits, and it's how you change habits. The other is Habits by Durig, I think his name is. But they are two excellent books on addressing habits. But to ask a question, there is no simple answer to how to stop drinking, how to stop smoking, or how to stop overtrading. There's no simple answer about, when you get a profit, how do do you let a profit run? Um, you know, it's embarrassing to me to admit that yesterday was my best day of the year, and it was the best day of the year because I was locked in an MRI tube and I couldn't get out to mess it up. I mean, we never fully know ourselves. But to answer your question, start with understanding a habit and how habits change, and it's a very intricate undertaking. Okay, what else? One last
Okay.
question.
Sure, and somebody just mentioned that James Clear from Atomic Habits, the author of Atomic Habits, has put out an excellent app to help with forming good habits and stopping bad ones. So I thought that was important to mention. So thank you for reminding about that. Somebody's asking, without a counter auction, can we assume that the market is weak?
No, that's when I started off with. You're sitting there saying the dailies turned down, the weekly's turned down, but the monthly hasn't. When you take a look at a trade location, you're still within. You're still one time framing higher on a monthly basis. Biases will kill you, and this is why I started with take a perspective of where we are, and I highlighted that a similar situation to this a few years ago, the market turned up and made 22 new highs. So, when you ask the question, can I assume the market's weak? Generally, that's somebody looking for a confirmation of what they already believe and what their bias is, and they want somebody to confirm that. And I can't confirm that. Can I confirm there's a lot of volatility in the market? Yes. Are we still one time framing higher on the monthly? Yes. All right. Let me say thank you very much. I hope you consider joining us for the primer starting Wednesday. And if you're interested in the big course that starts, we will announce it soon in June. Don't forget, you need to have the either a prior intensive or the foundational e-course. Anyhow, once again, thank you very much. Have a great day.
Thank you so much. Stay safe, and we'll see you next time, everybody. Thank you so much.